I know your time is valuable, so I'll get right to it. Throughout this episode, I'll be giving out the exact strategies that took me from £100,000 in bad debt to building a $13 million portfolio. But this journey has given me more than wealth. It's inspired a mission to help everyday people like you take control of your financial future. So every week, my team and I pour everything into bringing you market updates and proven strategies because we genuinely believe that everyone deserves financial security. No gimmicks or empty promises, just real insights from someone who has walked this path. And to help spread these insights to others who need them, I truly appreciate if you could subscribe to our channel. When you hit that button, you're telling the algorithm that our content is valuable, which helps us reach more people who deserve this opportunity. You're joining a community dedicated to financial independence for everyone. If you do subscribe, here's my promise. My team and I will make this show better for you every week. We'll listen to your feedback, answer your questions, and continue supporting your journey to financial success. So thank you for being part of this mission. Hi, and welcome everybody to the Lunchtime Investor. We'll call it a podcast, call it a show. We're really happy to see you here because this is all about one thing, and that is you learning the real foundation on how to invest. And we need to be kept reminded of that foundation again and again and again. The whole premise behind it is, unfortunately, is that we do the talking and you do the eating, right?
Pretty much.
So we have Keith here as well.
Good afternoon, everyone.
How are you doing?
All good. How are you today?
Yeah, really good. Lots of things happening in the market.
A lot of things happening. I think today we've got one of the best episodes that we've had so far.
Really?
Because we're going to talk about something that is 80% of the game, which is mindset.
It is. It's about the psychology, but this time less the psychology of ourselves and more the psychology of the market, that
Correct.
herd mentality. Lots of these things here and lots of these things here, but mainly these things following each other in one direction. And when that happens, you've got to know what's happening. So we can have a look. Tell us a little bit about the psychology then.
So one of the biggest things about psychology is we talk about every single week, right? Fear and greed. Mm-hmm. When others are fearful, guess what? It's our time to be greedy. When others are greedy, it's our time to be fearful. And a lot of people just take it with a pinch of salt, like, yeah, okay, that's all good, that's well and good, but how does that actually affect me as an investor and trader? And the way that I look at it is the emotions of an investor, the emotions of a trader, then dictates which way the market tends to go. And unfortunately, we are not the big players in the game. Okay, institutions drive the market. So what do we want to do? We want to follow the trend. As you said, that herd mentality. If we're seeing the bigger players being bullish, guess what we want to be? Bullish.
Well, the last thing we want to do is the analogy is stand in front of a moving train, right? Because you think, I'm going to go against the herd. I'm going to go against the train. At some stage, you're like, I think I'm going to lose this one.
Yeah.
Jump out the way. Jump on the moving train. Go in the direction. Having said that, we are a bit contrarian.
At some level,
okay.
At some level. But I remember there was a movie as well. I don't know what movie it is, where the guy's standing in front of the tank to stop it. I think it was one of the Kung Fu movies. I don't know which one. But he managed to stop it.
You managed to stop it.
But that is
that's not really
that's one in a million.
Analogy, Keith. Come on. The analogy is you get out of the way of the tank.
And jump on the way forward.
Think Tiananmen Square. Think Tiananmen Square. Okay, so we have something that we can show you. Hold on a second here. Let's have a look at this. Okay, can we see whether we can bring this up, because I think this really encapsulates the whole thing, right? Mm-hmm. It's it's very well known, and some of you might have seen it. Say it on the chat if you have seen this before. The Wall Street cheat sheet. Wall Street cheat sheet. Okay, it's really the psychology of a market cycle. So take us through this a little bit.
So during the market cycles, as we know, we have ebbs and flows in the market. Prices go up, prices go down, prices go up, prices go down. And that, as a beginner investor and trader, really influences their decision should they get in or out in the market. Because when prices go up, they don't try and time the market. They run on something known as FOMO, the fear of missing out. And they just jump. Even as prices go into the highest price, they just keep getting in. Because they start feeling optimism, belief, thrill. And then at the all-time highs, guess what? They're feeling euphoria. And that's where a lot of new investors get in at all-time highs.
Well, this is it. And most people, they wait. I mean, I see this again and again and again. Mm-hmm. You know, they wait. And then even they might get in around here, and then they're thrilled, right? They're going to buy some more maybe even, right? We do the opposite, by the way.
Correct.
And here I'm a genius, okay? There you load up. remortgage everything,
100%.
get in here, etc. This point here is the worst time to get in. It is the point, you can see on the top right, the point of maximum financial risk is at the top of the market. This is where most people get in. They wait and they wait and they wait. Well, I mean, I don't know, should I get in? Yeah, I think I get that. And then they get in at the wrong time.
100%. And then all of a sudden they make 2-3% profit and they run about telling their friends and family, I told you I knew what I was doing, how I'm making money in the market. I am so good at this game. And then the market starts to sell off.
It's interesting that you call it a game. Do you think most people do view this as a game?
Yeah.
It does have rules.
It does. They look at this more as a gamble. New investors and traders look at the stock market as a gamble.
That's why 90% of newbies lose 90% of their money, right, within 90 days.
Correct. But remember, this isn't a gamble. This is a second stream of income for a lot of people. And you've got to treat investing and trading as you would treat a business.
So if you're trading, it probably is a second stream of income. But for me, and what I encourage everybody to do is to keep reinvesting. Do you remember we talked about compounding a few weeks ago with Henry, to keep reinvesting, so that later on in life you have a big chunk. I mean, Andy, who was supposed to be, Andy, I don't know whether you're here, but you're coming in June now, but you were supposed to come here. And he's on, after 4 or 5 years, he's on 700,000. See, because if he would have used it for cash flow, then it would be gone.
Correct.
Whereas he's building up that wealth. So what about here? So what about here? When the market then turns, okay, and people come down, oh yeah, and they still buy into it, buy into the dip, for example, right? Yeah, if we can just show the chart, I don't know whether we're showing it or not, but and then anxiety here, oh, like this, and then around here, and then you know, it says shit here. So I'm just reading out what it says. It's shit, everyone is selling, I need to get out. This is where most people panic, anger, resentment, depression, etc. Now, when the new rally starts, they're not going to get in.
No.
They've just lost all this money. They're not going to get in, which, by the way, is the same as over here. And then it starts going into this cycle again. And they're not going to get in here. Is it real? Well, I'm not sure. Oh, I think, shall I get in? And the people that got hurt, they're going to get in again at the wrong time. So people, generally speaking, this is where they say newbies, they buy high and they sell low, when in fact we all know we should be doing the opposite.
100%. And I think one of the biggest things that they see is when you look at your portfolio and you're seeing red number after red number after red number, and the price is going lower and lower and lower and lower, and they don't do anything, they're like, I've got to stop losing money, I've got to stop losing money, I've got to stop losing money. And all of a sudden they'll sell at the loss, right? But as others are fearful, we have to be greedy. The strategy that we look at is buy as the market falls, but don't just buy anything. Because you can buy a brand new company without knowing anything about it, and that company could go to zero. Go into the strongest companies possible. So even if price is falling, you're thinking, this is our best time.
Why don't we look at a company a little bit later that is a good company? The price massively fell. I really want to hear your thoughts about that, because to that point, I mean, the bottom's dropped out of that stock. I mean, absolutely. So we'll come on to that, and I hope nobody is in that particular stock, so stay tuned for that. Let's see what people are saying here. Got a question for Marcus or Keith, write it in the chat. Oh, that was a question. Hello, Keith, thanks for your energy over the weekend in the workshop. Oh, you were in the workshop.
Crypto workshop. Amazing. Amazing 3 days.
Yeah, it was.
A lot of information, a lot of dancing. I think that was
a lot of dancing. People are like, what's dancing got to do with it?
Yeah, we dance a lot. But I think one of the biggest things about the crypto workshop was just the aha moments.
Okay.
People,
give me an example.
So the thing that we look at in the club memberships is you learn the theory, right? Anyone can learn the theory, but it's all about how do you implement the theory. And that's what the workshop is there to do. We implement it, not on a live account, on a demo account.
Well, so some people are live.
Some people are live.
I would go live. Why would I not go live?
You can go live, right? But if you have a bit of fear about losing money and you want to create a foundation with experience, a lot of people tend to go to a demo account and therefore have real market exposure, but no real risk on the table. And
so everybody who's maybe new to this, tell me, do you think it's a good idea? Write in the chat that when you start something new, it could be brand new, i.e. you're new to trading and investing, or it could be a new strategy. Would it be a good idea not to go live with real money, but for weeks or months, just go into either a virtual or a demo account where everything is real? Like the button is real, the prices are real, everything is real, the order's real. If you don't get it right, it doesn't know what you're doing. But if you put it in, the only difference is it's not real money. Put it in the chat if you think it's a good idea, because I got to tell you, Keith, even when we came up with the Contrarian Momentum strategy back in 2019, we demoed it for 4 months straight, saw it working, and then we went live. Let's see what people are saying on
We've got
that.
yeses, absolutely, yes, yes, yes.
Yeah.
A lot of yeses coming up. And
by the way, some people say, well, I don't learn that way. I need to go live immediately. Let me tell you something. Even if it is for one day, right, or 1 week, it's worth doing, because you might buy 1,000 instead of buying 100, or you might buy the wrong ticker, or it's just the rookie mistakes. Just get rid of the rookie mistakes.
Get rid of them. And I do get people come to me and go, but Keith, I need skin in the game. I actually need skin in the game. But the thing is, you already have skin in the game. The skin in the game doesn't have to be financial. The skin in the game could be your time. Because a lot of people forget that time is the most valuable commodity. So if you're spending time on the demo account, you have skin in the game. Because if you're looking to compound over 10 years and you spend 1 year on a demo account, you've lost a whole year. So that is still giving risk on the table, that you need to be implementing the strategies and following something that is simple.
Let me tell you something just on that point. There are some people, Keith, they won't even go on a demo account. They're that petrified.
Yeah.
And I'm like, but just press the button. Like, what's the worst that can happen? He goes, yeah, but it's not real money. And they still don't pull that trigger.
Of course.
So talk about psychology. They're so petrified they won't even go into a demo account.
It's the fear of the unknown. I think that's the thing.
Exactly.
They don't know what's going to happen.
Nothing can happen.
No, but in their head, they're like, but I'm still trading money. And it's just like, yeah, it's virtual money, though. It's nothing real that's going to happen. But it's just still getting past that fear. And once you get past the fear of the unknown, guess what's on the other side? Real growth. And that's what we push most of our members past. Because everyone at the beginning has that fear.
Yeah.
Okay, so we push you past the fear. You actually then start to grow, get the experience, and then the hardest thing that you have is then not following the emotional cycle of the market and going against what your nature should be.
So let's show this again if we can. This is now a kind of a simplified slide,
the emoji
if you
version
like, the
of it.
Emoji part of it, of the cycle. So what you're basically saying is, if you're investing, and I'm just going to, hopefully people can see this, when people are, that thing about when people are fearful. So around here is a good time to start feathering in, right? We should start feathering in here, a little bit more 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 here, get our average price down. I mean, this is a good way of really looking at it, right? But you need to be feeling those emotions.
Yeah. And the hardest thing is, how do you go against that? Right? If you're anxious, if you're in denial, if you're fearful, if you're panicking, if you're angry, how do you go against the emotions and actually buy a stock or buy an asset?
Well, a couple of things I would say. One of the things is to back test it again and again and again. We've had 91% of the people that back tested 200 times. And one person in 4 days did 50 back tests. So it's very possible to do it in a few weeks. 91% of the people that did that back testing were profitable. 91%, Keith. So the reason is, of course, is that we said don't do this here, right? The point of maximum financial risk at the top. You want to do it down here, the point of maximum financial opportunity. That's where you want to be getting in. Now, some people might say, well, why bother feathering in here? Why not just wait, Keith? Wait till it gets right to the bottom and get in at that point.
I always get asked that, and I go, everything's all great in hindsight, right? Because you can see, the bottoms were here, the bottoms were here. When you were in it live, how do you know if that's the bottom?
You don't.
You don't, right? And you're like, oh, I should have bought. And then all of a sudden you buy because the emotion comes in play. And then guess what the market does? It goes down again.
And anybody that tells you that they can teach you to time the tops and the bottoms, they're either lying to you or they're lying to themselves. Yeah. It's delusional. Nobody can.
It is. And then when you try to do something like that, it does become a bit more of a gamble. So what I would always look at is finding the best companies possible and just feather in. It simplifies the process. If you overcomplicate investing and trading, you never take action.
I agree with you. Keep it simple. Actually, the simplest strategy, this is something I was saying before, is that our strategy, out of all the millions of strategies out there, might not be the most profitable, but for the time spent and the emotional certainty, I think it's the best strategy. Let's have a look at the chat here a little bit. Let's have a look. I went straight to live. Oh, Raj went straight to live. Look at this. Using demo account wouldn't have worked for me. Tell us why though, Raj. Why wouldn't it have worked for you? Because even if you do it for 1 day, you still get the buttons right. I meant to buy. I sold short. Ha ha ha. I meant to buy 10 and I bought 100. Just get rid of those kind of things. What about this one? Roy's asking, what is the logic behind taking 20% from a 50% profit? Feathering, why not 50%? I'm not sure I understand the question.
So what Roy is basically asking is in the crypto side.
Once you're in profit,
so
why only take 20%?
Correct. So when we're in the crypto market, instead of the market goes up 50%, we take the whole investment, we part sell. And just like we feather in the market because we don't know where the bottom is, we feather out of the market because we don't know where the tops are.
Well,
so,
I could tell you, during, my favorite thing during the workshop is always the lunch with the golds, the gold fast tracks, right? And there you had people on Solana making, I think the record was 1,300%. They had 1,000%, we had a 700%, etc., and so forth. Now, if you were to take it all out at that point, you might make 50%, but you're never going to make 100, 300, 1,000%. And when you make, let me tell you, when you make 1,300% on one trade, that lifts up your entire portfolio.
100%.
So you got to this is a golden rule, Keith. Go on. What is the golden rule?
In the golden rule of trade investing, you cut your losses short and you allow your profits to run. You never want to put a ceiling on that.
As long as possible, let your profits run. That, by the way, cutting your losses is kind of the simple thing. I know it doesn't sound like it, but it is, because we have a rule around only risking 1% of your entire portfolio per trade. But letting your profits run is like the dark arts. You know, it's like there's rules. By the way, if you want to know what that strategy is on stocks, you can download my book, 25 Years of Trading and Investing Experience there, called The Lunchtime. I don't even know what it's called. What's it called? The Lunchtime Trader. So go ahead and you can get your copy there. I guess that's where the Lunchtime Investor came from, right? But do you know why we changed it? Because trader sometimes is kind of too Wall Street, Gordon Gekko, showing my age here. What's the other one? The Wolf of Wall Street, that kind of thing. I don't really like that. So maybe investing.
They call it the naughty word in the world of finance trading.
The naughty word.
Yeah, because people think it's get rich quick, which it definitely isn't.
No, of course, right? Absolutely not.
The most wealthiest people, they make money on trading, but they compound that return. So they're not taking money out. They're growing their account, and that's where wealth really comes into play.
Absolutely. Check out that the interview we did with Henry.
Yeah.
After 4 years, I think 4.5 years, he's on 400,000. And then he said, I can't wait for the next 4 years or 5. That's the way to look at it, Because you imagine, it went from 5,000 to 400,000. Well, okay, great. So where's that 400,000 going to go to? That's compounding. But people don't wait that long, Keith.
They don't. And do you know what? I was in that camp, right? When I first started investing in trading, I don't know if you know this, I was investing in an ISA, right? And an ISA tax-free, perfect, right? But an ISA is open door, meaning I could go in any time and take money out when I wanted to.
That's the great thing. Hold that thought. That's the great thing. So ISAs, individual savings account, you can put 20,000 in a year up to per adult per household. So if you have an 18-year-old in your household, that's 3 of you could potentially do it, right? And the great thing is you can ferret it away and package it up and it's tax-free, right?
Correct.
But the problem is you can also take it out. Whereas a SIP, a self-invested personal pension, you can do the same strategies, but you're stuck in there. But they changed the laws on that. You can take it out now.
Retirement age. You can take it out closer to retirement age.
Right.
But for me personally, there was a lot more regulation around a SIP where I couldn't take the money out. In an ISA, I was making profit. I thought, I know exactly what I'm doing, taking money out, and I damaged my compounding journey. So then, after 2 years of doing that, I was like, this can't go on. So then I put it all into my pension. And I tell you, the last 4 years, it's just been compounding.
So you got a self-invested personal pension, a SIP?
Yeah, SIP.
Oh, who are you with?
Hargreaves Lansdown at the minute.
Okay.
Maybe looking to change.
Yeah, to II Investor, they seem to be.
Do you know there is a section on a SIP that they allow you to have a dollar-based account with Interactive Investor.
So you don't have that
FX
exchange
rates.
rate every time?
No, only when you deposit and withdraw, the FX rates come into play.
That's really good. I love that. Oh, this is a fun thing. Shall we show this one?
Yeah, show them that.
Okay, if we can quickly show this, what it basically shows is, this has got to be of the Wall Street cheat sheet is, of course, stocks, because that's what Wall Street is all about, right? Although they're starting to come into cryptos now, Keith.
Slowly.
But this one here, I think is cryptos, no?
This definitely is a crypto.
This has got to be. Looks like a good investment all in, right? A small dip, probably buy some more. Healthy correction, right? And then whack, and it goes down. And then you have that massive, this is true actually, you have that massive sideways movement, which can happen months, sometimes even almost a year. You get bored, and then you want to go into something else, and then it absolutely shoots up and says, what the fuck?
And that's known as an accumulation process. If you know cycles.
The sideways.
Yeah, when you start seeing sideways movement, that's accumulation. People are buying at the bottoms here, the bigger players. As long as they believe in the utility of what they're investing into. They buy into that, and the market just rallies higher. Look at, in very simple terms, look at the stock market. We were talking about it a couple of weeks ago. We were technically in a bear market, down 20% from all-time highs. A couple of weeks later, we're now looking at making brand new all-time. We're 3% away from brand new all-time highs.
So what do you think? Is this going to continue?
On to the upside, I feel right now with the 90-day pause with China and the US and tariffs being lowered there, I don't see no reason why we won't push to the upside. Only way we'll start coming down is after the 90 days when a trade deal isn't struck, uncertainty comes back into the market. And as we know, when there's uncertainty, the market hates that and the market tends to fall. So as long as there is a trade deal struck within 90 days, then I just feel we will make all-time highs. And then we've got obviously the Federal Reserve cutting interest rates as early as September now. Inflation's come down. So there is something called the CME data for the Fed, and basically it's what the market is pricing in for the first rate cut. So the next meeting, which is next month, there is a 93%, I think it is, chance that rates won't move. And then the first time that there is an odds-on rate cut is in September, because inflation's coming down, tariffs are looking a lot better.
Let's talk about this, right? There's something called confirmation bias, right? So you're saying following the herd, going against the herd, etc., and so forth. So here's the thing, though. Once you start thinking, like you, for example, just said to me, it's going to go up, etc., all-time highs, etc. There's a thing called confirmation bias where you start listening and hearing and looking at podcasts that agree with you.
Yes.
And so all the news agrees with your point of view. So if somebody says something else, you go, no, like this, because you don't want to hear it.
No.
You want to hear what you want to hear, right? Makes you feel safe. Do you believe in confirmation bias?
It does happen. It does happen. Look at crypto, right? When you invest into a crypto asset, let's just say XRP, for example, and you invest into that for such a long time, you fall in that trap of, this is going to play out, this is going to play out, this is going to play out, this is going to play out. And when other people go, no, this is the worst asset, you start blocking it out. And you're like, no, but I believe in it. But
they're just being negative.
Yeah, but it's good at a point, right? Because you follow your approach. The only time that this becomes a problem is when you go against the strategy, when you invest too much money, when you invest more than you can actually risk, okay? And that's when it becomes a problem. So if we're looking at, for example, I'll give you the XRP example. I've been investing since 2017, all of the SEC case and stuff like that. I was still invested, so I didn't sell out. I carried on following the strategy.
It just went sideways for years.
Yeah, the price was being held down. And then the market...
You don't mind that? You don't mind that?
At the point, it was more accumulation. This is the one thing that I was looking at. There was still...
So you kept buying? I
kept buying with the strategy, not over-risking. But when I look at something that is going down in price, is there something in the background that is actually a divergence? So if price is going down, but fundamentals are going up of the asset, there's going to be fair value struck at some point, because price won't always go down until people go, this is too cheap, I'm going to now buy. So with the likes of XRP, with the likes of Nvidia, Palantir, some of the bigger companies, as they were falling, the fundamentals were always improving. So that, for me, is like, okay, there's going to be fair value. People are going to buy in. The FOMO's then going to come in. It's going to force price up. When that's going to happen, I don't know, because I'm not trying to time the market.
So it sounds to me like you don't need to spend that much time then investing.
No, you don't. Just get rid of the noise. As long as you believe that the fundamentals of what you invest into are strong and you have a simple strategy telling you where to buy, just follow that strategy.
But
ignore the
do you
noise.
then always listen to people that are telling you what you really want to hear, like your favorite people? Or do you, because some people, they actually say, right, there's this thing called confirmation bias. So what I'm going to do is I'm going to seek out people that don't agree with me.
Yeah. So one of the people that I listen to about the overall market absolutely hates XRP.
Interesting.
Hates it. Says it's the worst investment.
Oh, actually, that's
and I still listen to them.
Yeah.
Because everything else, and for me,
you just don't listen to that bit.
Well, I still listen to that bit, and I'm like, okay.
No, but you don't listen. You hear it, but you don't really listen.
I don't take it in because I've done my fundamental research. But again, have we made profit? Have we taken profit off the table? Yes. Is there a potential trade on the table there? Again, the answer is yes. But you don't put all your eggs in one basket. I think the confirmation bias really comes into play where you've invested everything in one asset and that asset has to work.
Yeah.
If that's what you've done, then you fight for that asset. But if you've spread your risk across the table and you've go, right, okay, if XRP doesn't work, I've got Solana, Bitcoin, Ethereum, AVAX, Near Protocol, I've got other assets to boost up my portfolio, then you don't fall in that trap of it has to work.
Talking of like this kind of confirmation bias, I'd love to know, on the chat, please write, do you think that Bitcoin is dead right now? Now, the reason I'm asking, I want to show this chart, right? So just right now, do you think Bitcoin is dead? You know, because it hasn't reached its all-time highs for ages. We should be in a massive bull market. Everybody's buying into it, but it's not really reflected in the price, right? It should be a lot higher than it is now. This is the Bitcoin death declarations, right? In a chart, right? So I don't know how many times it is. It's something like, 450 times. I thought it was more actually. That somebody notably has said or written in a news headline, Bitcoin is dead.
Yeah.
Right? And so these people will keep saying that because as soon as their confirmation, or sorry, their bias is actually confirmed, then they write it again and again and again and again. So look at this, how many times it's actually dead. Now, it beggars belief, doesn't it? Because it's just going from strength to strength.
Always. Look at it this way. How many times did institutions at the beginning of crypto say cryptocurrency is a scam? They kept saying it and saying it and saying it and saying it. And guess what they were doing? They were building stuff in the background. They were building their own investment portfolio. They were buying into Bitcoin. They were looking at how we can get into crypto in the best way. And all of a sudden, ETFs started to come about. So if crypto is dead, why is an ETF being built for you to invest other people's money? And that's the thing that I look at is there's always a reason behind the news, and that's the propaganda. What is the reason for them to want price to drop?
Who's them though? Because like an institution like JP Morgan, for example, they're the most notorious one, where in 2017, they drove the price down by saying, because he's a very public figure, right, Jamie Dimon, and he said something, the price went down, and then it was discovered, because you can see everybody's trades, that the JP Morgan traders were the ones that were buying the most after it went down.
Time,
I mean, is that not market manipulation?
It is market manipulation. But again, if you look at it this way, do you listen to the noise or do you follow the strategy? No matter what Jamie Dimon said or what JP Morgan said and what they were doing, it didn't matter. Why? Because we were able to feather in anyway.
Well, for me, it's always about, and I think I did an emergency webinar on this like last week, I think, which is, make sure that you don't listen to what they say, but do what they do.
Correct.
Follow their actions. What are they actually doing? They're saying this, but what are they actually doing? And it's funny, it's a divergence, just the way that you were saying just now on all of these others, like XRP and the others in NVIDIA, where, yes, the price might have been going down or sideways, but actually the fundamentals are getting better and better.
And that's the same with Bitcoin. As Bitcoin was in its bear market, what was going on in the background? You had MicroStrategy buying Bitcoin, Tesla buying Bitcoin. You had ETFs coming into play, ETNs now coming into play. There's so much happening in the background as price was falling that alternatively, the price was going to rally up because of the utility of Bitcoin was seen. And they've gone, now this is too cheap. It's our time to really bundle in now. We've been buying at lows, but now it's our time to really start implementing price.
There's massive buying going on right now as we speak. MicroStrategy getting in again, Kathy Woods from ARK Investing getting in again, the BlackRock ETF. We're talking about a lot of money going in, millions. So why isn't the price higher?
Why isn't the price? That's a great question.
That is a great question.
It is, but
is it being manipulated as usual?
One of the things that I see with crypto, and the biggest challenge with crypto, is the deregulation or the non-regulation in cryptocurrency, and a lot of people can over leverage positions. Okay, and that over leverage of the positions, even though people might be buying the underlying.
What does over leverage of a position?
So over leverage basically means if you're leveraging something, you're using other people's money. Okay, you're getting bigger trades in the market without actually risking the full amount of your account. So, for example, if I have, let's just say I have £10,000 account and I have a 10-to-1 leverage, I can potentially trade 10 times the amount.
Sounds amazing.
It does, right? But people over leverage. With stocks, you used to be able to get 100 times leverage. Now you can get 10 times leverage, 4 times leverage. With crypto, you can still get 100 times. You can get 1,000 times leverage. Wow. And that's what's holding price down. People who don't know about what they're doing with the market are over leveraging the market. So even though we have people buying the underlying asset, that is still going to be holding down price, and why we see such drastic swings in the market. Until that regulation comes into play, then we can start to see a constant upflow. But no matter what's happening with the over leverage, as long as the underlying asset is still being seen as utility, we are still going to see growth in price over the next couple of years, especially with Bitcoin.
We have a great question here. Denny is asking, I'm a US citizen selling Bitcoin in the UK and transferring dollars to a US bank. Does the UK assess capital gains tax? Well, we don't. Well, we shouldn't answer that because that's tax advice. But because he's a US citizen, right, selling BTC in the UK, we can tell you what to do, right? But we can't tell you what. We can tell you how to do stuff, but we can't tell you what to do because that's more of a tax question.
Again, it depends on where your resident is. If your resident is in the UK,
it's not. Well, no, but there you go. You don't know, right? Because you don't know what the actual is he here, is he not here, etc. So it depends what your actual status is and who agrees with that. Does the US agree with it? Does the UK agree with it?
The thing is, if Denny is part of the crypto club, we had a crypto advisor come on and speak about tax, and that's uploaded into the club.
Ooh, that's a good point. Actually, if anybody's on here, we've got our members meeting, physical meeting in Heathrow coming up in June, and we're going to have an accountant there as well who'll be able to talk about these things. So that would be
massively helpful.
Okay, look at this. Like Christopher's saying, in a supermarket, the prices are always going up. So the staff reduce a few prices and tell the customers, so the customers are delighted. Brilliant. Okay, so here's what I wanted to talk to you here. What is this? Can we just show this chart very quickly? What is this? This is a company called United Health. Is that right?
Yeah, UNH.
Okay, why did you want to show this chart?
So this is a classic example of someone wanting to go and look for an investment and go, right, it is cheap. Let's just buy.
Oh, okay. So because it's fallen from this high here, I mean, this is a huge fall from something like 600 to it went below. Yeah, absolutely. Even more at one stage, but has come back up. So come back up, it's still down 50%. Okay. And so what are you saying? Most people would say what?
Right now they go, right, it's so cheap, I'm going to buy. And again, when you have a strategy, the strategy tells you two things: when to buy, but also what assets are the best assets to buy. And you have to understand, why is price dropping? Is price dropping because of the overall market dropping, or is price dropping because something's happening with the business?
So is this a good time to get into this one here?
For me personally at the minute, and again, it's just my personal views, it's not right or wrong, but with UNH, there's a couple of things happening with the company. Right now, you've got a DOJ investigation for fraud, not really too good, looking at that way. You've got a brand new CEO coming in to play someone.
That's normally a good thing.
It normally is, but there was the unfortunate death of one CEO that was murdered on the street, which isn't good. A new CEO come in. Now that CEO stepped down. They brought a CEO who was there from 2011 or 2017. I think it was 2017. So between 2006 and 2017, he was the CEO. So he's now come back.
Too much detail. So basically, what you're saying is that there's too much smoke there.
Yeah, there's too many moving parts to then go, what is going to happen with the fundamentals?
But my question to you is, why would you get into this at all? Because I've never heard of this company. Now, you might say this is a really big company.
I've never heard of it. One of the largest healthcare companies out in the US.
But how is this a blue chip? Why would we get into a company like this? Why is this a blue chip?
So if you look at the definition of a blue chip, one of your definitions, and we keep going back and forth on that, is do they provide more than one product? That's the first thing.
Do they?
Right? And UNH, no. But the main thing with UNH,
well, that's out then.
They're in the US market.
Okay, hold on. What is the other criteria? There's 3 criteria. You might want to write this down, everybody, by the way. So there's a criteria, right? By the way, write in the chat, do you think this would be a good investment right now? We're going to have an argument now. Do you think this is a good investment right now? Write it in the chat. Okay, so one of them is that it has more than one product. Come on, I say it has to have lots and lots of different products, not 2. Right? Yeah. That's more than one. They have to have like 50, as many as possible products, but they also need to be all around the world. Are they all around the world?
If they're all around the world, nope.
They're not even around the world, so that's 2. And the third one is it a brand name that everybody recognizes or uses?
In the US, it is. So in the US,
all right, I haven't.
For insurance. They are one of the larger ones.
Really?
Yeah.
United Health?
Yeah.
Okay, fine.
So if you have a look at...
So 1 out of 3.
One out of 3.
Okay, we have 3 criteria. 1 out of 3 works. Shall we go for it? Because it's 1 out of 3?
It's true. It's true. If you look at that logically in that set way.
But that's the way we invest.
No, of course.
There's no emotion. It's logical.
But if you look at the other fundamentals behind the business, Do they make money? Are they profitable as a business? Are they growing as a business? And the answer is all yes.
It's not a blue chip. I wouldn't invest in it.
It wouldn't be a blue chip, but then you've got to have a look at, is it a value type investment? Okay, meaning, are they the leader of their sector? Are they having a large majority of market share when it comes to the healthcare sector? And the answer is yes. So if you're looking at it as a value investing or value investment, then they do meet criteria at set points, because they're profitable as a business, they are established in their market, they have a large amount of market share, they drive the healthcare sector. Whereas if you look at it as a blue chip, the answer is no, because they only meet 1 or 3 criteria. So it depends on how you invest.
Well, I mean, look, I'd rather go into something like Tesla, for example, which dropped also 50%, right? Mm-hmm. Because of all the stuff that Elon Musk was doing that wasn't very popular with Doge and all this kind of stuff. And look at it rocket up right now. Let me tell you something about Tesla. I'm not recommending it. Do your own research. This isn't financial advice. But what I'm saying is that, I think there was a report out. I can't remember whether it was Kathy Woods or from ARC, or they said the robotics arm alone will be worth the stock price that it is. That alone. So that's discounting the data, that's discounting the electric cars, that's discounting the storage, batteries, and whatever else. It's just the robots alone is already worth that price. So for me, and they're all over the world, it's a well-known name. So to me, it has more than one product. So to me, it's
a no-brainer.
That's a no-brainer.
But the thing on Tesla is, you don't have anything. Yes, okay, people didn't like Elon Musk. They were selling shares, they were pumping price down. But the fundamentals were still there in the business. We didn't see anything negative happening to the fund happening.
Well, that's not true, because there was a decrease in the sales of Tesla cars.
But if you have a look in Germany, but then how I always look at this, because that is big propaganda news, look into the nuance of it. It only made up around 3% of their overall revenue. Mm-hmm. So a drop in that is not going to play a massive part, in my opinion. If it was a drop in US sales or Chinese sales, then yes. But the problem that we've got with UNH is we don't know how the DOJ investigation about fraud, we don't know how the new CEO is going to implement the new strategies, we don't know what's going to happen in their fundamentals over the short term. So therefore, there's a bit more risk on the table here.
So some people are saying, if you're talking about UNH, they would definitely go in. We just did a poll. Brilliant. Well done, team. We just did a poll. Would you invest in UNH right now? Yes. Well, Keith. It would have been Keith or Marcus. I think that's what we were really talking about.
Keith or Marcus?
Well, Keith says yes. Marcus says no.
But
No. And we're ending the poll. Can we show the results, please? 66% of people agree with Marcus. Let's just leave it at that. Let's move on.
I think we watched the replay.
By the way, this thing could shoot up. I'm not saying it might go all the way back up. I don't know when, by the way. Mm-hmm. Right? Crystal ball time? No idea. It might do. And by the way, at a 50% discount, interesting, right? Interesting. But for me, I don't like speculating with my hard-earned money that I've spent. I'm sure people watching this are like, I work every day for my hard-earned. I'm not going to throw it and gamble it into the market. This is what people think that investing and trading is all about. It's not.
No,
it really isn't.
The one thing that I'll say, I'll always ask a question. It could be the best investment of the year. It could be the worst investment of the year.
That's good.
If you can't dictate if it's going to be the best or worst, why get into it? If it's a 50-50 spin up, are you really going to want to put that money at risk?
So are you coming to my side?
I was always on the no side if we look at the replay.
All right, fine. Well, we're not going to look at the replay. What is the logic behind... Okay, Roy's asking, what is the logic behind taking to it? We've already
I think we've gone through that one.
Yeah. Cool, fantastic. Thank you so much. Well, we're coming towards the end of the episode. So any wise words that you'd like to add?
Wise words from Keith. Just ignore the noise. When you invest, just ignore the noise, have a good, simple strategy, and invest into the strongest assets possible that you know your money is safe. Okay.
To me, it's like get started as soon as you can. It's one of the 5 pillars of wealth that nobody talks about, but everybody should be in, because you can literally divert from the comfort of your own home. You can divert 10, 15% of everything that you're earning every month into solid stocks, but just go into the ones that have a bit of a pullback.
Yeah.
Not something you've never heard of that has a massive pullback, although that's a different strategy, I guess. But just keep doing that, and over time, and letting compounding do the work, you will be extremely, but I mean extremely successful. Because if you think about it, the average is the US stock market goes up by 6.9% a year, has done since the 18th century, since it started, and the last 15 years has gone up by 10% on average. What is there not to like about that? And if you have specific stocks that maybe you like, and by the way, you all know these stocks, right? The Amazons, the Googles, the big ones, right? You could mention MicroStrategy, you could mention Walmart, although I wouldn't necessarily, but the big ones, a nice little pullback, get into those. If it goes down, get into a little bit more with a strategy, learn a strategy. And we have some phenomenal successes, phenomenal. I mean, people making hundreds of thousands over time, not today or next month, but over time.
One of the things I've seen,
tax-free as well.
Tax-free. One thing that I've seen over the last few weeks, I'm seeing our members in the trading club saying they're making 20, 30, 40, 50, 60, even 70% on the money invested over the last few weeks because they've been buying the dip on the biggest companies.
Fantastic.
So it works.
So you don't have to speculate.
No.
You don't have to go, oh, this company, what does it do? I don't know. Let's just get in. No. What does it do? Do you know it? Does it have lots of assets? Is it international? Come on, you know the name. You even use the brand for it.
I love buying something that I use.
Yes.
Like Duolingo. Got into Duolingo because I use Duolingo. Right? Fundamentally.
He's learning German.
I'm learning German.
Können wir jetzt Deutsch reden?
Sorry, say that again.
Können wir jetzt zusammen Deutsch reden?
Shortly I will.
That was English.
Yeah, I know. I can't say shortly I will.
Okay, fine. All right, thank you. Listen, remember, when you hear success stories like that, our message to you is never quit, because if they can do it, you can do it too. And we'll see you next week.